WTI is pulling back this morning, still on track for its fourth straight week of gains for the first time since January. Brian Sullivan joins us to talk about the energy landscape. It's had a heck of a week, heck of a month, Brian. The question is this more supply at work or demand?
Carl, I think I think you hit it. Okay, I think it's a combination, and you referenced something earlier which maybe tells the story. You talked about that TSA data showing 333,000 people going through the checkpoint. Yeah, way down as you noted, but it's coming back, I think, faster than many in the market expected. Same way with driving data. We look at all these high frequency indicators, the Apple mobility data, the TSA pre-check stuff, all the driving data from TomTom. And what we're seeing is that people are on the roads more. They're flying a little more. Again, a long way to go. But jet fuel is about 35% of what we use our refined products on. Driving has come back to almost normal levels in major metropolitan areas, certainly around Houston and Atlanta. We're seeing major comebacks there as well. So I think we've got two sides to the story. Demand is coming back a little quicker maybe than the market expected, and supply is coming down perhaps a little quicker than the market expected. The U.S. probably off about 1.5 to 2 million barrels a day in terms of supply right now, guys. So we literally flipped the script in 30 days, but let's be clear. $30 oil is not good news for anybody, but it's better than negative $30 oil, I would assume.
Yeah, Brian, I was just going to jump in and say, clearly 30 was around the low for the range, right, in early 2016. And I just wonder, beyond supply and demand, the other factor, which we've watched for the last couple of months, is just the positioning issues and the blow up in the futures market in the last expiration had to just clean out anybody who just was a non-physical or non-professional, non-interested owner on the long side. I just wonder how that's all swinging things around, whether it's causing overshoots.
Well, okay. Did you see the DTO this week, Mike? I missed it by a day, so shame on me. The DTO was a double inverse short sale ETN, exchange traded note, put on by Deutsche Bank. It was a Robinhood favorite. It was on top 20 or whatever list of retail people buying this double short. The DTO imploded this week. It went away. It had what they call an acceleration, which is their technical term for basically it's over, and it just stopped trading. I think it was on Tuesday or Wednesday, and if you owned it, you got wiped out. So the DTO is gone. We've talked a lot about market structure in some of these instruments, Mike, and that's kind of what we've been seeing is that USO, that other ETF that got all the attention, it used to hold 100% of that front month contract. They spread it out. I think that has helped calm the markets. But for those guys, like in the DTO, you literally woke up one day and whatever you had in it was gone. It went down to zero and you got no notice.